thanks for AWE for having us here. My name is Clifton Dawson. I'll be your moderator for this particular session. I'm really excited to focus for the next 20 minutes or so on investing in AR and VR content. We are really fortunate to have an excellent group of investors and analysts assembled on stage. Before we get started, I want to invite each one to tell us about themselves and their funds. So maybe we'll start with Amitt.
Hey guys, my name is Mahajan. I'm managing partner at Capital. We're a seed stage VR and AR fund. Done about 30-ish investments in the space since 2015. Really excited to be here. Thanks for having us.
Tim Merel. I've got two companies, Digi-Capital, which is an AR and VR M&A advisor, so investment banking, and Eyetouch Reality, which is a VR, AR, and mixed reality tech developer. I'm a software engineer, investment banker, and lawyer, so I've got one honest profession.
Excellent. Hello, everyone. I'm Tipatat, Chennavasin. I'm general partner and co-founder of the Venture Reality Fund. We're early stage, so we do seed Series A investment in AR and VR startups. We've done 18 investments so far. And most relevant for this panel, we invested in Alchemy Labs, which recently exited to Google or Alphabet or whatever they're called.
Hi, I'm Peter Rojas. I'm a partner at Betaworks Ventures. We're an early stage pre-seed and seed fund based out of New York, but actually I'm here on the West Coast. And we invest sort of broadly in the intersection of media and technology. I've done about 6 or 7 deals in VR and AR. Also, prior to all that, you may know me as the founder of Gizmodo and Engadget.
Great. You know, we have a very challenging task because the industry, there's a lot of excitement about the industry, and content's a really important part of it. So we're going to start by maybe talking a little bit about what has been changing in the investment landscape as it relates to AR and VR content. Tim, maybe we can have you start.
Yeah, I think like any market has ups and downs. If you look over the last 18 months, there's actually been a baseload of between 300 million and 500 million a quarter of investment into AR and VR broadly. It's gone up and down, went down a bit last quarter. Looks like it's coming back up this quarter. In terms of where the focus is, I'd say that's changing. There was probably more excitement around VR going back earlier last year, and I'd say particularly what's happening now with Facebook, with the mobile AR platform, there's a stronger focus now on AR, and particularly mobile AR. So it changes. I think the regional thing is really interesting in that what we're seeing, because I've got both developer and investment banking side, I see both, is the Chinese investors in particular seem to be more ambitious in terms of scale of investments and also willingness to take a long-term view. There's been a little more caution, I'd say, in the US market compared to China, and in some cases compared to Europe.
That's an excellent overview of really the changing dynamic that we're facing. So maybe let's start with first talking about consumer content, both AR and VR, and then we'll talk about non-entertainment content, enterprise content. Tip, we know that you spend a lot of time looking at the sector. What are you seeing that excites you about investing in AR and VR?
Sure. I mean, definitely on the content side, we're seeing whenever there's a new platform, there's opportunity to invest in content where usually, or content studios, where usually VCs would be shy or move away from as it gets a more mature market. And so, you know, both Amitt and I, we've done, I don't know if Pierre has, but we've done quite a few VR content studio investments, but we don't invest in content themselves. But what's interesting is now, you know, not only do we have the platform guys like HTC, Oculus, Samsung, Sony investing in publishing content, doing these deals to fund great games, but then we're also seeing like IMAX stepping up and other players getting involved, seeing, okay, the wheels are kind of spinning, there's opportunity to invest in content. Viacom's been investing in content too. So it's great to see people are investing in content creators, building great applications, and then we can come in and invest in the companies themselves. So working together, I think the ecosystem's growing, and it's not just tech VCs that are investing in content studios.
Now that seems like something that's changed, because I think the last time that we had this conversation was about a year and a half ago at CES, and the general sentiment at the time was, you know, picks and shovels, and studios, you know, we'll wait and see. Is that still the case, or are we are you guys as investors focused on studios now?
So investing in what you might define as sort of more pure media or content businesses is always difficult from a venture standpoint because the possibility for venture scale returns can be pretty limited. We've made a couple of investments in what you might consider to be more on the game kind of content side. We were an investor in the seed round for Against Gravity, which makes Rec Room, which is one of the most popular VR games. But one of the reasons we invested, there are two reasons we invested. One is, besides the usual stuff that the team's amazing, is that we found that they were figuring out a lot of the dynamics around creating these social VR games and learning sort of more quickly than anybody else we had seen, but also that the opportunity to take that and maybe more broadly extend that beyond just a game itself to a wider social VR experience. So for us, the content isn't necessarily enough to build a massively scalable, multi-billion-dollar venture business, but we see it as being an entry point into a bigger opportunity.
And can you be specific about some of those companies that you've seen that fit that model?
So most of the investments we've made have not been disclosed yet, so I don't necessarily can say yet, but I know that these guys have invested in some of them.
So I can share a little bit on that, because we take a very similar view of it. So we're in Harmonix and we're in Baobab Studios. In fact, those are the first two investments we made in VR. And Harmonix, as you guys know, is the guys who make the game Rock Band. And you can argue that all they're doing is building games, but the way that we see it is that they essentially have this relationship with these music producers, and they have all this IP available to them. And so even though they're launching, like Rock Band VR, there's a long kind of LTV shelf life to that game, because you can just keep buying music packs, and there's actually an opportunity to monetize that much more deeply than just a one-off buy. And with both them and Baobab, we view it as kind of like you're building these reusable network effect IPs, right? So when we think about with Baobab, let's use Baobab as an example. They created this movie called Invasion. They just won Emmy. They just announced something they're doing with John Legend. So what they're doing is it's a very similar to a Disney model where the characters and the stories that they're creating, they're VR first, but there's lots of avenues for those characters. Again, this is similar to what Disney's done, where their movies are almost like 2-hour commercials for like theme parks and books and merchandise and all the other stuff that they monetize. So when we think about content, we're looking at not just the content as kind of a lead into something much, much larger. And usually the entrepreneur has to lead with that. Like, look, I'm building this thing and content is like a part of it, but it leads into something much bigger.
I think going on from that, looking at it from the flip side in terms of where we're starting to see acquisition activity and interest coming from some of the big players, because when you're investing, obviously thinking about exit, we're seeing really two ends of the spectrum. One we're seeing is a very strong interest in core tech, and this comes from the phone makers through to the other hardware makers, software platforms, and so on. And then very high volume social messaging, really lightweight, very high coverage, broad applications. A lot of appetite for that sort of thing, because what a bunch of the hardware guys are looking for is what's actually going to sell what we're doing. We've got all this wonderful technology, but where you place your couch in your living room is great, but 13-year-olds not going to play with it. So we're seeing both ends of the spectrum.
Now, that's really interesting that there are these examples of very successful investments and exits. Now, it doesn't always happen that one of your investments pans out. Can someone offer an example of a failed investment, and maybe what are some of the lessons learned?
We have no zeros in our portfolio.
Yes.
So we were an investor in Video, which was one of the early sort of social 360 video platforms out there, and they went out of business not too long ago, but I guess about 6 months ago or so now. And one of the lessons that was to be learned there is that the addressable market is still relatively small, right? For a business like that is predicated somewhat on there being a vast number of people who could potentially consume the product, setting aside the number of people who are going to creating 360 videos, getting easier with each passing day, but I'd say the demand side was one of the challenges. And I know Video's numbers, and they were actually, I would say, probably one of the biggest, most popular VR applications that were out there. And so I think one of the other issues is that when YouTube introduced 360, and obviously Facebook's introducing 360, Video's product wasn't 10x better. It was maybe a little bit better. Maybe it was maybe even twice as good, right, in terms of being very focused on what they were trying to do. But when you're trying to shift consumer behavior or get consumers to adopt a new kind of thing in a brand, under a brand or an area that they're not familiar with, you have to be a lot better. And so it's easy when people want to consume 360 videos, if they have any interest in doing that at all, to do it just on YouTube, which they already know.
Now,
let me add two I don't want to just say that we have no zeros, but I do want to say that we have seen lessons. There are lessons that we've learned, which perhaps could be useful. So just two things I'll go really quick. First one is that it's been, I think the consumer adoption of VR has been slower than everyone's thought, and that, again, keep your burn low and extend your runway as long as possible, because it will come, but it'll be longer. And that we're seeing people get into a funding crunch as a result of that. The second one is that especially if you're building core or deep technology or something that is unique for a limited period of time, if there's an opportunity to essentially realize that you have potentially a closing window of opportunity, especially for core technology. And sometimes the correct solution is not necessarily to continue on, but actually to sell. So.
Really interesting. So in the last few minutes, I want to shift gears a little bit. We've been talking a lot about consumer content. Enterprise. We know that most of the people here are actually focused on applying these technologies to enterprise applications. What's unique about investing in enterprise content?
Sure, I'll take a first stab at that. I mean, I think it's really interesting. When we meet these enterprise companies, there are quite a few that are like, okay, we've been doing studio client work, working with huge customers, we're bringing in revenue, but they're kind of one-off projects, and there's not recurring revenue off of it. It's just, okay, we built this great VR demo for this innovation lab at this big, Fortune or 100 company. But then it's like not necessarily repeatable, not necessarily scalable. So then we're like, okay, well, then they come up with, oh, we have this idea for a product that's gonna unlock this new type of content for this vertical. But then it's separate from everything else that they've been doing. So then you can't really count the revenues that they have as a creation studio or a service studio. And you kind of have to think about this as a new business and what does that mean, and kind of look at it in that way. And then is this the right business opportunity? Is this the right moment for that opportunity? And one of the biggest challenges I've seen is a lot of people are kind of pushing AR a lot where it's still very early in AR. I mean, we're talking about adoption of consumer VR is slower than we thought. The adoption of consumer AR is pretty much non-existent outside for mobile, right? Like very few people have HoloLens, very few people have Meta or any of these Magic Leap. And so, we kind of need this adoption. We need to get this platform thing figured out first on the AR side before we can really see a lot of enterprise applications. That makes sense.
I think there's another aspect with enterprise which is not unique to AR, which is sales cycles. Selling into enterprises takes a long time. When you also have an education element to it, it takes longer. So to be an investor into enterprise AR, you need to have a long-term approach to things. It's not going to happen really quickly. It'll be big, but it'll take time.
So I know Betaworks and Presence have invested in enterprise application.
Yeah.
So what's your thinking, and do you agree with that sentence?
So the way that we see enterprise, I actually think that the opportunity in enterprise is bigger for both VR and AR right now. And the main reason why is that if you end up giving, if I go to a company and I say I'm gonna essentially make your workforce more effective, there's a payback period on that hardware. You can effectively do the calculation of how much it costs me to adopt this hardware and then how much more productivity I get out of my employees, either in the form of like just getting more work done or potentially closing more sales or whatever it may be, however it's being used. So I think that like there's an actual like ROI case for buying the hardware, so the cost doesn't really matter. And then the other thing is that the form factor doesn't really matter either. So like if it's going to be a tool that you use for work, like if you go and you go to like a mechanic's garage, like it's not made for beauty. It's just basically what it's just, you know, all the stuff is effectively made for utility and not necessarily for like wearing on your face all day. So when you think about the dings against consumer VR and consumer AR, cost and form factor, those things don't really matter in the enterprise. And so there's actually no real reason that this stuff can't be adopted in scale today.
I know there's some examples of companies that you guys have invested in that you think are doing a particularly good job.
Yeah, so there's, so one of our companies is here today, Scope AR. You should go check them out at the expo. I think they're incredible, and they have a lot of different use cases across various enterprises. They basically superimpose training instructions on top of machinery. Scott, the CEO, you know, he's the first person that gave me this thought that you can use AR to essentially augment human like understanding instead of just capability. So I can effectively go and do a job where I've never seen the machine before, I've never learned anything about it, and be productive and perform work. And so like there is a huge opportunity to give people these devices and something like Scope AR, where you can essentially go from a workforce that's completely untrained to being useful and able to contribute to society.
Yeah. So we invested in a enterprise virtual reality company called Virtualytics. And what they do is big data analysis, visualization in VR. And what they found was it was Caltech PhDs worked on their thesis, uncovered that if you usually do data visualization, you can maybe compare up to 5 dimensions of data at one time. But using VR, you can compare up to 10 dimensions of data at one time. And this was not only let you work more efficiently, but you'd also get new insights that might not have been possible without VR. And those are like the transformative use cases that would actually affect the bottom lines of huge companies.
Peter, I want to give you the opportunity to start us off on the kind of final sort of takeaway. If we have one thing that we want to impart on the attendees, what would that be?
I mean, I would say that if you are looking to raise money, to think about, we're seed investors, right? And the thing that we think about is, what are you going to be able to do with the money you raise to be able to raise a Series A? And I think that's one of the things that a lot of founders don't realize is that you have to be thinking a step ahead, which is what are those benchmarks? And if it's an enterprise business, it's going to be certain benchmarks around monthly recurring revenue, whether it's $100,000 a month or whatever specifically it is. If it's consumer, it means some sort of meaningful traction on the adoption side, on the user adoption side. And so as an investor, I want to, if I'm going to invest early in a pre-seed or seed deal, I want to have some confidence that you see, I can see that path and that you know how to get there.
Excellent. I think that's a wonderful final note. I want to say thank you to our panelists for joining us today. I know that they'll be sticking around afterwards, so please come up and meet them and pitch them your ideas.
All right. Picture real quick. All right.
Awesome.
Thanks.
Thank you.